Rally around. Rally around.
Rally around small business.
Rally around.
Rally around. Rally around small business.
Welcome, everyone, to the Winning Wednesday webinar series. I am Jeff Herrmann from the Business Journal, and I am thrilled to be joined by the team at Valley Economic Development Partners for this webinar on growth strategies for high-risk industries. We're going to have a very active discussion today. I will do the introductions briefly, and then we're going to jump right in, consistent with our thesis on webinars. We know you all have compressed time, so we're going to make sure we deliver great, valuable information in a short amount of time. And we are joined by Teresa Miller, Terry Louk, and Mario Nero. Did I get the names correct?
Yes, you did.
Okay?
Yes.
Okay, excellent. So I'd like to first take a minute to thank Valley Economic Development Partners. They specialize in providing local businesses with access to the capital they need to grow our region's economy. And it's you guys have been doing this since 1978, so that's quite a long time, executing and doing the important work that you do. So with that, jumping into the topic of the day, consistent with our rally around small business strategy, we all know funding and capital is critical to success, and so we're going to tee this up, use a Q&A format here today. Let's talk about it. Let's, kind of set the stage here, set the highlights. What are growth strategies for high-risk industries? How can high-risk industries tap the capital they need? What are some of the requirements and hurdles often that they encounter? So I'll hand it over to you guys.
So high-risk industries are classified in general as restaurants, bars, hotels, gas stations, daycares, contractors, industries that have low barriers to entry with limited capital needed to start. There's a number of different things that businesses can do to overcome the high risk classification by the bank. And what some of them are they're going to want to look at having a strong technical assistance or support team. That's inclusive of your accountant, your lawyer, professional support. And you want to have, in addition to those, good internal practices, meaning QuickBooks and good software that banks can easily relate to and understand. You want to keep up-to-date financials. You want to work with your accountant on a regular basis where he's more of a financial advisor to an extent. So what you don't want is in that accounting role where we've encountered problems is where you have someone doing your taxes. It's more of an order taker than a financial advisor and a partner. Mario might want to expand a little bit more on that piece for the accountant.
Yes, a lot of times people like to plan, to reduce their sources of income. And a lot of times they'll put strategies in place to do that and also take advantage of tax laws. But when it comes to, borrowing money, cash is king, and cash flow is extremely important, especially with high risk industries. So you want to make sure that your business is capitalized and showing a good profit. So, you want to make sure you're balancing the two, risk, tax benefits versus showing the ability to grow your business down the road. And, high risk industries are tough. The banks, as well as ourselves, we like to Terry's point, you want to make sure your business plan and things of that nature, we want to make sure we set you up for success and not for failure. So we ask you some tough questions sometimes, and we make you do some extra work. And it's the reason why is because we want you to succeed. We don't want you to fail. So, and to Terry's point, the reason sometimes, we look at a tax return and, well, my accountant designed it, or I purposely didn't want to show income. We get that, but that's not always the best answer for us. Is that what you're looking for, Terry?
Yeah, no, I think that's a good explanation. I think in addition to that, one of the things that we've encountered a lot, and Teresa can talk to, especially with PPP, is as a business owner, you have to know your business, structure, operations, et cetera. Teresa, do you want to talk a little bit about how important understanding how you're organized and named?
Yes, it's important to always, of course, you get that federal EIN letter from the IRS that says, here's your federal ID number. You want to make sure you always have that nice and handy for everyone. And then if you're doing business in the state of Ohio, you need to make sure that you file your articles of incorporation or articles of organization with the state of Ohio website, which is a very simple thing to do. And then every time you apply or you're filing your taxes, you want to make sure that name matches exactly what you filed with the Secretary of State, because not using that name can slow us down in trying to find it and locate it and things like that. And if I can add to your conversation of offsetting, one of the obvious answers that a lot of people might not think, and it's not easy to do, is to make sure you have that reserve, the cash reserve. Just sets funds aside every month. It seems like a simple thing, but again, when you are in a high risk industry, it might be a little more difficult to do. But having that cash reserve helps make you bankable and helps make the deal a little more easier to get through.
So I have two questions, just kind of level setting. Question one leads to question two. In a high risk business or a small business, is there a certain revenue level that banks, financial institutions, lending facilities look for to say, look, unless you're generating $250,000 a year or some, is there what's the kind of the low water mark on revenue before you get into things like, which is question number two? I heard Terry, you say tool sets. So often, you issue an invoice via a Word doc or an email. You keep your books on a spreadsheet. Here's my revenue, here's my expense. What are those kind of base milestones, and how important is a QuickBooks, for example, which could run up to, what's that? There's a subscription is $20 a month, I believe, and typically it's tied into your CPA who can do the administration for you. So, talk about what's that milestone to get there.
Mario, you want to take that as the previous historical commercial lender?
Yeah. They identified some of the most risky industry. They classify it by revenue. The smaller the business, the riskier it is sometimes. And a lot of times the $1 million mark is a good threshold for business, for the financial institutions to look at. Now, and that's where we come into play a lot as Valley Partners. We were formed in 1978 as a result from the demise of the steel mills, and we received a grant from the EDA. And that grant was put in place for lending and partnering with the banks to reduce their risk. We came in the second position, took on the risk on the collateral position to help these small businesses grow. And to your point, Jeff, QuickBooks, the best advice, Terry and I were talking a little bit earlier, is the best advice we can give small business owners is reach out to a good accounting team. Get a good legal team in place. I know even though you're small, a lot of businesses say, I can't afford that, but sometimes the cost outweighs the risk of not having that. So it's very important to look at that.
So even solopreneurs, like say I'm thinking of a baker, right? Somebody that makes cookies, or a marketing consultant, somebody that doesn't have any overhead and their equipment is a laptop. I know that volumetrically, once again, if the $1 million mark is kind of when things start to accelerate, but are you saying sooner rather than later, get that infrastructure in place?
I believe so.
It's worth the cost.
It's worth the cost. There's a lot of times attorneys will take a pro bono call where you can just call and ask them a little bit of advice. Accountants will do the same thing. Naturally, there's going to be a cost associated with it, but the best thing you can do, and then there's research you can do on your own. There's Small Business Development Center at YSU. There's a great resource tool. The library is a great resource tool if you want to educate yourself. But when you're running a small business, it's hard to wear all those hats. So you want to make sure you're balancing it correctly. Just like when you're running a family, you have a big family, that's a balancing act, raising your kids properly, balancing your life with your wife, work, etc. It's prioritizing and making sure you have a game plan in place, a strategic plan, game plan, whatever you're looking at. You want to make sure you're planning properly.
Yeah, and the banks have aggregate exposure limits and levels, and they have various bankers assigned to them. So those very small businesses that you're talking about that are operating out of their house, one of the biggest hurdles I think they're going to encounter is oftentimes they're going to enter the bank with the branch staff. And again, the branch staff is knowledgeable, but more so on a consumer lending level. And those are going to be those guys filing Schedule Cs that are doing limited revenue, to your point, like 200,000 and under. The likelihood of them getting to the business bankers or the small bankers or the BDOs, it's a little bit tougher for them to get there. They're going to try to process those loan requests through the bank. And when you're dealing with somebody that focuses on numerous areas of lending, you may miss some of that expertise that you can receive from your business banker and your commercial lenders. So that's the challenge, is trying to offset those small dollar requests. A lot of what you're going to look at is when you're at your initial stages of operation with a small business, people are going to refer you to home equity lines of credit, personal loans, credit cards, even, because those products are a little bit more, they're a little easier for you to get. They're going to fall back on credit score. You're going to have a little bit less of a full evaluation, but at the same time, it's hard for you to build that credit and those relationships with the bank and get to that banking level. So it's going to be probably an aggregate exposure of, at the minimum, $250,000, and probably more in the range of about $500,000 before you get to that small business lending department.
Okay.
And that's where I think, to Mario's point, we can come in and play a role and assist you, because our programs, we have a number of internal revolving loan programs that Mario works with on a regular basis that are geared towards those small entities while providing the expertise in business lending as opposed to consumer.
Okay. So your ideal client profile is, if for someone to come in and engage with Valley Economic Development Partners, they have to have a run rate of at least $500K a year in, top line. Does that sound about right?
No, not for us.
Okay.
We can go much lower. We've gotten, and again, this is Mario's area of expertise. He works with a number of small businesses. What would you say your aggregate revenue is, Mario?
It's actually, you'd be surprised, Chad. We do a lot of credits that are under 100,000. And it varies. It varies across the board. But Teresa, I would say the majority of the clients that I'm dealing with right now fall under the $200,000 annual revenue production. What would you say, Teresa? You see them come across the closing desk. It's much lower than people imagine, isn't it?
It is, and I agree with your assessment. But we also do startups, Jeff, as well. So, technically, I guess it could be at zero,
right?
with a good business plan in place, of course.
As I say, pre-revenue. So if you're pre-revenue, the business plan and the forecast has to be you very buttoned up, right? Very buttoned up.
Yes.
Yeah. So you're going to need. Good.
I'm sorry. Again, our partners at Small Business Development Center and down at YBI, the WE program and MBAC, they are very helpful and a good resource to that. And we're also looking to add that resource here in our office internally as well this year.
And Terry and I were talking earlier, along with Teresa, about this. We've been so busy with the PPP loans recently, we haven't had a chance to just sit down and talk about things. But, the 5 C's of credit are still very important. It's very basic, but you always have to rely on that. When you're trying to get a personal loan, back in the day when I started, it was, they taught me 5 C's of credit. You have to have those. And those apply whether you're getting a personal loan or a business loan. So those are important planning aspects going forward. You want to make sure your character's there. You want to make sure your credit's in good standing. And we've all run into problems, but there's ways to address that, and that's where we come into play too. If a bank has a minimum credit score and your credit score is a little lower, we can come into play and work with you on that. That's what some of our programs are designed for. You know, and then you have the cash flow and the capacity, and Teresa was talking about that earlier. Capacity in my world is cash reserves. You know, you have the capacity to rely on something if something does, you get a hiccup down the road. So those are all important. You know, your good character, everybody makes a mistake, but when criminal records are detrimental when you're trying to get a small business loan. You have to make sure that you've addressed those situations and rectify them before you're able to to move forward in a lot of instances.
Yeah, I think what we've seen too recently, just with the economy, I mean, we've experienced a much different level or volume of loan requests than we thought. And we've seen a lot of people take what they call a quote unquote side hustle and turn it into a thriving business. And that is, it's to your point, it's the baker that started on the weekend that might, work somewhere else. And then they continue to grow that. And the best way that we've seen folks grow and turn those hobbies into performing businesses is, again, you're going to start out, to Mario's point, with your own capital. You're going to build your sales to a point where you've been able to put some money aside and build a good cash reserve. And then that's really what the lender, the bank, whether it's one of the traditional lenders or us, you're going to look at in combination. So they're going to want to see a personal credit score at first. Typically, the lowest a bank's going to work with is 680. They prefer mid 7s to high 700s. They're going to want to see your personal credit with limited to no derogatory items, no open collections, no judgments, no liens, no current bankruptcies. So once you build that credit and you build those cash reserves, then you're ready to take that next step and look into a business loan for expansion, whether it's the purchase of a building or equipment. Those can play a huge factor in getting that traditional component or even a loan with us. You're also going to want to see, and it almost sounds counterintuitive, what lenders like to see is outside income. So income that's especially in the small startup sense or small businesses that are getting ready to expand, they want to see a secondary source of repayment that's outside of the business revenue. That's extremely important. A lot of times, if you're not working an outside job, a second job, a lot of times what you can offset that requirement with is spousal income or a guarantor of a parent or a sibling or a family member to give the bank or that lender a little bit more comfort to reduce those risk components that they're trying to mitigate.
So speaking to high risk industries and restaurants in particular, we've spent a lot of time, and I know you probably have as well, agonizing over the fate of restaurants given this past year. What's that been like, kind of dealing, supporting restaurants over this past year, and then what's their outlook and how are you supporting them here as we get into full reopening and they get back to business?
Teresa, you want to touch on our new loan fund?
The one that's almost gone.
Right. How we assisted businesses with that?
We did assist actually a number of restaurants with expansion. It was surprising, again, on our end. A number of restaurants added outdoor patios or extended their seating because of the fact that they had to have 6 feet of spacing. And we were blessed with an award from the EDA of $4.6 million in the middle of 2020. And we have, I think, about 100,000 left in it. It's all been lent out to a lot of industries, including restaurants. And the other item that was surprising was the fact that a number of them were able to bounce it back doing carryout. I had a local restaurant say they actually did better in one quarter based on their carryout than they did when people were coming to sit inside and eat. And so I think that made the awareness of some restaurants out there as well. So when people do decide to return, they will be able to bounce back.
Yeah, Terry and I talked a little earlier about being able to adapt. a lot of these restaurants, like to Teresa's point, excelled during the pandemic. They suffered. They took that initial hit when they were ordered to shut down, and then they slowly started doing takeouts. But the ability to adapt in those environments are extremely important. And the Teresa's point with the loan fund that we, a lot of businesses we've assisted, which was great. It was we used it for what it was intended for. And I had one comment that was made to me through one of their accountants, and the comment was made, if it wasn't for us being able to help them out with that loan during the pandemic, they probably would have closed. So, and now they're open and thriving again. So adaptability is extremely important.
Yeah.
And on the same side, I'm sorry, Terry. Real quick, okay. On the same side, we were able to be adaptable. So the restaurants that were already in our portfolio, we were able to allow them a deferment period or an interest-only period during that time when they were struggling. So us being able to be adaptable, I think, helped a lot of them make it through as well.
And the financial institutions did as well. And Terry, I'll have you speak to that with the SBA. They were able to assist these companies as well.
Yeah, and that's the most important part. So initially, and it's no secret to anyone, we saw a huge pullback. And our job as lenders and economic development agencies were to help these restaurants get through that initial pullback. And that's the way we approach this. And that's where our banking partners approach this. And I think a lot of it stems from what we learned with the Great Recession, is that we did ourselves no favors by clamping down on our lending policies. So we took a little bit of a different approach. And I think that's why you saw such a drastic response from the federal level and the SBA. So with deferments, with SBA 1112 payments, with the rollout of the PPP program, with our new loan funds that we rolled out, we took an approach that if we can get these guys through 18 to 24 months, we believe we're going to be followed by a period of prosperity. So one of our bankers in a loan committee meeting brought up the fact, and I think it was important, that the last pandemic was followed by the Roaring 20s. So for those restaurants, there's a pent up demand. We got back to a simpler way of life, but I think there's going to be a lot of demand for folks to go out and go back to the restaurant and kind of resume normal life. And I think we're going to get to that pretty soon here. So I think that's important.
Excellent. Well, I know we want to wrap it up here. Promise the audience to keep it brisk today, but anything else we need to know about lending to high-risk industries? I know we covered the 5 C's of credit, and we also talked about basically the basic revenue levels that are best suited in the tool sets required to get into that communication flow. But anything else that we haven't covered yet today?
Patience. A lot of times we, again, financial institutions as well as us, we ask questions and we make you maybe give us another form of financial information, or how can you provide secondary resources, as Terry mentioned. The worst thing that we see, and it actually is a red flag, when someone calls up and says, I have an idea, but I need to get this done by next week. It's just not going to happen that quickly. And and patience is your best virtue. It's just you have to be prepared to do it properly. And the worst thing you can do is want to rush through anything, because that gives us honestly an indication that, are they really prepared to move forward with their project?
Yeah, you want to understand the risks and challenges and hurdles you're facing and be able to mitigate those factors with the bank or with the lender. And you want to take advantage of the enhancements and know where your request fits. And that's some of the things that we can help you with, whether it's using a SBA 7A or using one of the 504 products or using an internal revolving loan fund. You want to know about those enhancements, and you want to know about your business and understand the hurdles facing you and how we're going to get over those hurdles. That's the best thing I think you can do.
And I'd say just remember that we're here to help, that we are here to partner with you and work with you to try to get you to the goals that you're trying to achieve. So if we are asking for that additional paperwork, it is just to make sure that you're covered and you're doing everything that you need to do in order to be successful.
And no business is too small for us. Remember that.
No, that's good to know. That's good. Well, yeah, you provide great resources. And like you also mentioned, there's a great, what I would call a value chain through your various partners like the SBDC, the YBI, the MBAC program, the Minority Business Center. I'm sure. Who else is in the in your chain, in your continuum, your supply chain of
well, the financial. I want to mention the financial institutions that we partner with, and they've been wonderful to partner with. All the local and regional banks in the area. In fact, prior to receiving the loan fund from the pandemic, Teresa launched and was the spearhead to an hedge fund program, economically disadvantaged. Teresa helped me. And that was a match from the EDA. It was an 80-20 match. We were able to take advantage of that. And the lending institution stepped up, and we raised their donations comprised the 20% match we had to come up with. And we received a grant of $1.6 million. So we have a $2 million loan fund that we launched right before the pandemic hit. So that's extremely important. And Terry, I'm going to have you just tag along real quick because I think it's very important. We tease each other in the office. I'm the small deal guy. Terry's the big deal guy. And the SBA 504 program is extremely important, and we rely heavily with the financial institutions. So I'm going to have Terry maybe end this real quick.
Yeah, the SBA 504 product is a great program for entrepreneurs and small businesses. And small business has a vast definition per SBA. It's $5 million in average net profit and $15 million in tangible net worth. So you can fund a lot larger of a business than you realize using that program. We internally have the ability to partner on projects as small as $5,000 and all the way up to $13.5 to $15 million on a standard 50-40-10 split. But the purpose of these programs, again, it's for us to mitigate the bank risk and help guys and businesses and women get access to capital that they need to expand. So we can lower your injection, fix your interest rate, extend your payments, give the bank a better collateral position, all to put the entrepreneur or the small business in a place to succeed.
Excellent. Well, with that, focused on success, that sounds like a great place to end. Teresa, Mario, Terry, we thank you so much for your time today and your commitment to helping small businesses and all businesses in our community. And we thank you also for your support of the Rally Around Small Business, our annual campaign to celebrate the unsung heroes, right? The fuel of our economy are small businesses. And effectively around here, every business is a small business. And so I know you guys are always open, willing, and able to support any businesses as they come in and look for, such important tools to help them grow. So thank you again so much. And we will see you next time.
Rally around small business. Rally around small business.
Thanks for watching the video. Be sure to like, subscribe, and hit that little bell for notifications. And also make sure to connect with us on Twitter, Facebook, and LinkedIn. For all of your business news, visit businessjournaldaily.com. For all of your arts and entertainment news, go to afterhoursyoungstown.com.